Hi, so I joined JPMorgan Asset Management in 2013 to work alongside Georgina on the Mid-Cap Investment Trust. So 9.5 years in total, it'll be a decade next year. And in terms of how we work together?
So our approach is that we both look at everything. We look at the stocks we own within the portfolio and indeed our whole investable universe. So we absolutely do not divide our universe by sectors or indeed stocks. And the idea there is that we both go away, do our own research, thinking and analysis, and then come together to make our decisions. Sometimes it's very straightforward and we agree immediately because clearly we're following the same investment process, we're looking for the same factors, but sometimes we will have disagreements about, let's say, end markets or valuations, and that's when we'll have the debate and decide on our outcome.
So the FTSE 250 is slightly more domestically focused than the FTSE 100. It's about 50-50 in terms of domestic revenues versus international revenues. FTSE 100 is about 70% international. I think the important feature of the FTSE 250 is that it's much more diversified. As fund managers, that allows us to really pick and choose where we want the portfolio to be focused. We don't have to weight a large amount of the portfolio within those large stocks as you do in the FTSE 100. And in terms of the characteristics as well, I think we do have access to world leaders in this part of the market. These are companies with strong management teams who have established themselves over many years, decent balance sheets, strong free cash flow generation, and that does provide the opportunity for very long-term returns over many decades.
In terms of income, well, clearly in COVID we saw a number of companies cut dividends for fully understandable reasons as they were protecting their balance sheets in that difficult time. It is noticeable that in the FTSE 250 dividends have been reintroduced probably at a much quicker rate than anyone expected, and we're seeing strong growth in both dividends and in fact in buybacks.
It's worth reflecting here that actually we are very much bottom-up stock pickers, so it reflects the underlying stock selection within the universe that we operate in. For example, in terms of changes over time around the Brexit referendum result, we switched from being very domestically focused to being very internationally focused. And indeed, at the start of this year, we were more domestically focused with a positive outlook on the UK economy. Clearly, the impact of inflation and the Russia-Ukraine conflict has negatively impacted the outlook for the UK economy, and therefore the underlying stock opportunities have changed for us, leading to a change in that revenue exposure within the portfolio accordingly.
The trailing dividend yield on the trust as of today is just over 3%, 3.1%. I think most investors will be aware that during COVID, a lot of companies cut their dividends. We, in terms of the investment trust, we paid out of reserves because we were capable of doing that. But we have absolutely seen dividends coming back to the fore in terms of the companies that we invest in. And indeed, we're also seeing a growing number of special dividends and buybacks. So this is very much sort of on the agenda. And I would just add on that, we take comfort not only obviously from the recurrence of dividends and the growing dividends that we're seeing, but also the buybacks demonstrate the strength of the company's balance sheets that we're invested in. So clearly we're very disappointed by the performance of the trust over the last year. Effectively, we came into 2022 wrong-footed. We believed that the UK economy was very much going to open up and consumers were going to put their hands in their pocket and start spending, in particular on holidays, on going out to the pub, going to the cinema, etc. We also believed, unfortunately, we followed the Bank of England, and we believed that inflation, at that stage we believed inflation was going to be transitory, probably peak around 7% early in 2022. Clearly we all know that's not been the case, and as that became clear, And then, of course, as Russia invaded Ukraine, we pivoted the portfolio and reduced our consumer exposure and indeed our domestic exposure, and made sure that there were more defensive positions within the portfolio.
Importantly as well, we've continued to focus on the key metrics that we've always done. The investment process hasn't changed, and it's important for us to continue to focus on those, as over the longer term that has reaped rewards from not panicking during times of market sentiment driving stock markets. So we hope that fundamentals will come to the fore eventually, and as I say, it's important for us to continue to focus on the investment process that has worked over the longer term.
So it won't surprise you to know that, given we obviously run the mid-cap fund, we have spent quite some time delving into the long-term outperformance of this area of the market. We think there are a number of factors that contribute to it. Firstly, it's literally the nature of the size of the companies within our universe. So they're not so small that they can be easily derailed by issues, tending to have more than one leg to their story. But they're also not the behemoths of the FTSE 100 who just by nature are going to grow more slowly than the more nimble mid-cap companies. Secondly, again, in the mid-cap universe, balance sheets tend to be incredibly strong, so you know, we have that support within the companies.
In terms of just the longer term returns, they have been incredibly strong, and I think we're blessed in this part of the market to find very strong management teams as well. So there are high quality management teams throughout the FTSE 250. They have opportunities to take their product and service overseas, expand their product set or service set into adjacent areas. And again, that provides further growth legs over the longer term to these companies within the FTSE 250.
Well, we very much hope that the type of companies that we're owning within the portfolio, and obviously that isn't a glib remark, we expect and hope that companies, first and foremost, with strong balance sheets, absolutely crucial at all times and especially in more difficult times. Ideally, companies with strong margins and strong positions vis-à-vis their customers and their supply chains, so that they're capable of dealing with a high inflationary environment, but also capable of getting supplies in, because we're still, for a lot of companies, looking at inventory shortages and supply chain issues, and this has rolled on obviously since lockdown ended and lasted a lot longer. So I mean, it comes back to, you know, our start and our end in terms of investing. You know, we're looking for what we always call the long-term winners, and the long-term winners, you know, as I say, need to be strong in all those areas. They need to be companies that always look after their staff, so their staff, A, will stay with them in times of high employment, but also, you know, will ride the punches in terms of very high inflation in the short term, knowing that they'll be well looked after. I say that they also have treated their supply chains at all times with respect and treated them well, so that they will benefit from that in terms of when times are difficult. So, you know, this is about high quality companies, that high quality management, and then of course in growth, strong growth areas.
Many of the stocks within the FTSE 250 and indeed in the portfolio, they can be characterised as being leaders in the areas they operate, either in the products or services they're offering or in the regions that they operate in. And again, that provides those structural growth opportunities, combined with the strong balance sheets and free cash flow that we look for, enables them to continue to deliver shareholder returns, hopefully for a very long time to come. I'd say it can be described as moderate to high, and that comes with higher volatility but also higher returns. And Georgina talked about the high returns that are on offer from this part of the market over the very long term. So we're talking multiple decades here of strong performance of the FTSE 250 versus other indices around the world.
So just to add to that, you know, as Katen said, you know, clearly this is a more volatile area of the market. When the UK is in focus for negative reasons in particular, so Brexit, COVID, and more recently obviously with the high inflation and slowing GDP, it's the FTSE 250 that declines most swiftly, but as you've heard, over the long run, the bounce back comes very strongly. I think I'd say optimistic but cautious. So unsurprisingly, management reads all the same newspapers as us, listens to the news, here's the Bank of England and its most recent very gloomy prognosis. So not surprisingly, they're cautious in their outlook and they're very aware of the risks and the threats coming to the country and to their own areas of business. But we're in the middle of results, we've heard a lot of companies speaking, and generally, the news on the ground is still good. So, as I say, cautiously optimistic. We frequently discuss how over the long term, and really, you can go back to the 50s, 60s, 70s, kind of, so seriously long term, this area of the market, the FTSE 250, is one of the best performing areas in the developed world, one of really the strongest indices. Clearly, there are times of volatility and downtime, such as we're in now. But over the long term, and investing is all about the long term, this is a universe that tends to outperform.
Talked about the leaders that we find either in their products or services or in the regions they operate in, and really it's trying to identify those opportunities that will provide those strong returns for many years to come. Some of the characteristics that we focus on are the free cash flow yields of companies and the consistency of that free cash flow generation, the returns on capital that are being generated, and indeed companies that are conservative in the way they operate and able to surprise on the upside in terms of the earnings delivery versus market expectations. And that combination of companies, I think, does lead us to hopefully identify the stars of the FTSE 250.
We often refer to long-term winners within the portfolio, and that really is what we're looking for. And you can see that over time, over the almost decade that Katen's been with me running this fund, the number of companies that we own that get promoted into the FTSE 100 is a firm indicator of exactly that.